All right, welcome to the Explainer. Today we are going to pull back the curtain on the US tax system and talk about the unwritten rules. Because, for a lot of businesses, especially small or international ones, it turns out it's not just about what you pay, it's about what you have to reveal. So let's just get right to it. What does the IRS really want from your business? The obvious answer, the one everyone thinks of, is your money, right? But the real answer, the thing that's actually driving how all this works today, it's something totally different. It's not just about the cash, it's about the information. Look, don't get me wrong, the money matters. Of course it does. But for a huge number of businesses out there, particularly if you've got international ties, you have to understand that the IRS is playing a completely different game. The real prize for them, it isn't your check, it's your data. Think about it. They are literally building a map of who you are, what you're doing, and exactly where all that money is flowing. And that brings us to the first big unwritten rule, what I like to call the information game. See, you have to shift your thinking. The IRS isn't just a collection agency anymore. It's this incredibly powerful data gathering engine. And here's the kicker. A lot of the time, it wants your information even if it doesn't want a dime of your money. Okay, so what does that look like in the real world? A perfect example is something called an informational return. Now, if you're an international founder who set up a US LLC, you've probably heard of this. You have to file it. And why? Well, the goal is pretty simple. The government wants to get rid of a massive blind spot, all these untracked, foreign-owned businesses operating in the US. It's basically their way of saying, hey, we see you, we see what you're doing, even if they're not asking for any tax money. And listen, this isn't some weird niche rule that only applies to international folks. Not at all. Just look at what's happening with Form 1099-K. The amount of money you can receive through platforms like PayPal or Venmo before it gets reported, well, that threshold is about to plummet. We're talking from $5,000 all the way down to just $600. Now think about that. This isn't about catching some big-time tax cheat. No, this is about casting an incredibly wide net to pull millions and millions of tiny little transactions right into their data systems. But here's something you might not realize. It's not just you who's under the microscope. The IRS has basically created this gauntlet for tax professionals. They see them as the front line, the gatekeepers of the whole system. And that fact, it completely changes how they have to interact with you. This whole thing is a legal requirement called due diligence. And it's a huge deal because it totally transforms the job of a tax preparer. They're not just a form filler anymore. They're more like an investigator. They literally can't just take your word for it. They are legally required to ask questions, to probe, to confirm your information. And believe me, the IRS is actively testing them to make sure they're doing it. So what does that test actually look like? Well, the IRS can just demand to see a bunch of client files. They'll go through all the worksheets, and then they'll get the preparer on the phone for an interview. But here's the crucial part, and you really need to get this. They are not auditing you, the client. They are auditing the preparer's process. They're trying to figure out, did this person ask all the right questions? Did they do their job? And this is why you might hear your tax preparer say something like this. When they start asking all these really specific, sometimes kind of uncomfortable questions, it is not because they're being nosy. It's because they have to. They're legally obligated. So what might feel like they're prying is actually them doing their job to protect everybody, and that includes you, from some pretty serious penalties. Okay, so let's shift gears a little bit. We've talked about data, we've talked about the preparer's role, but what's the one thing that often separates a simple informational filing from a really hefty tax bill, especially for our international founders? It comes down to one word: geography. Where your business physically happens, that changes everything. The key concept you need to wrap your head around is called effectively connected income, or ECI for short. This is the absolute pivot point for federal tax. Let me give you an example. Let's say you're a freelance designer living in Mexico. you have a US LLC, and you serve clients all over the world online. In that case, you almost certainly have no ECI because the actual work isn't physically happening in the US. And the result? You don't owe any US income tax. But, and this is the important part, that informational return we talked about, oh yeah, that's still required. All right, so this table really helps break down the two completely separate worlds of tax you're dealing with. Let's start at the bottom, with the state. This is usually pretty simple. You might have an annual franchise tax, which is basically just a fee you pay to a state like Delaware or Wyoming for the privilege of having your company registered there. Simple enough. But then you look at the top row. That's the federal level, and it's a whole different beast. Here, it all comes down to ECI. And like we just saw, that could mean you only have to file some information, not actually pay any tax. They are two totally different systems with totally different rules. Okay, so let's pull all these threads together. We've seen how much the IRS cares about data. We've seen the pressure they put on tax preparers, and we've seen how critical geography is. So what are the big unwritten rules we can walk away with? Well, here they are. Rule number 1, information is just as valuable as money to the IRS. Rule number 2, your tax preparer isn't just working for you, they're also being watched. And rule number 3, when it comes to tax liability, geography is king. The big takeaway here is that compliance isn't just about filling out a form. It's about navigating a whole system. And that system has its own logic. A logic built on data, shared responsibility, and location. If you can understand that logic, you're halfway there. And that leaves us with one final, and I think pretty huge question. This entire system we've just walked through, it's all built on the idea of geography, on knowing where business happens. But think about our world now, a world of remote teams, digital nomads, and cloud services. In an economy like that, where is your income really located? Answering that question? Well, that's going to be the central challenge that defines tax for all of us over the next decade.